I'm Bernard Hickey from interest.co.nz, and welcome to a special report here from the Fonterra headquarters in Auckland, where I've just spoken to Stephan Deschamps, who is a General Manager of Treasury for Fonterra. Fonterra are raising $300 million in a retail bond offering that's due to close next month. They're offering 7.75%. It's a 6-year unsecured senior bond. And I asked Stephan Deschamps, what is a senior and unsecured bond in Fonterra? What does it mean? And later on, what are the risks of investing in Fonterra? Stephan, from an investor's point of view, what does unsecured senior bond mean?
That essentially means that the bonds we're planning to issue will be ranked at the same level as other indebtedness that Fonterra has, essentially. So if you compare the bonds to our bank debt, for example, they will all ranked equally and have the same level of risk, if you want.
So let's say there's some problem and Fonterra is struggling to make the interest payments, and shock horror gets put into receivership and there's some sort of liquidation. Who gets the money first, if you like?
That's very much driven by law in New Zealand, so there's a specific ranking, but that means that the bondholders will be treated in the same fashion as the banks or existing lenders to Fonterra.
But they'd be ahead of the shareholders?
That's by definition, yes.
Can you tell us what are the risks from a bondholder's point of view over the next 4 or 5 years in terms of the outlook for Fonterra and the global economy and what's happening with milk prices?
Sure. If we talk about milk prices quickly, everybody knows that milk prices have come down significantly, which really reflects the balance of supply and demand. Demand has been affected by high prices and by the economic situation. At the same time, we've seen quite a significant increase of supply, especially coming from the US, reacting to high prices. So we're currently in a situation where there's probably too much product in the system, which is driving prices down. We believe that we're probably close to a bottom of the market, or not very far away from that. The recession could mean, if the recession gets deeper and more significant, it could mean that it takes longer for prices to recover. But you have to remember that what we're saying is a very basic product that people need. It's a product with very significant health benefits. And if you look at the projections over time, and especially the changing diet habits in Asia, for example, and in a number of emerging economies, the outlook for dairy product is still very positive over time.
What are you going to use the money raised for?
The money will be used for normal business purpose. We are a very large company. We're a multinational company, so on a regular basis we have funding requirements, and that can be meeting working capital requirement or paying back some of the existing bonds or debt which is maturing. So it's really part of our normal funding process.
Why didn't you raise the money from wholesale, international or domestic money markets instead of going to mums and dads, the retail issue?
We have. Again, we're a large company, so we have reasonably large funding requirements. It's normal part of our policy to diversify the sources of funding. We don't want to be overly exposed to one specific market. If you look at last year, we've done a number of bond issues. We've issued in the US, we've done a wholesale placement in New Zealand, we've issued in Europe. So that diversification of funding sources is really an ongoing part of our strategy.
What is Fonterra's debt levels now, and where do you expect that to go?
The gearing at the end of July was around 57%, so that's net debt over net debt plus equity. We've made it very clear that we wanted the gearing to come down, so by the end of the season we would expect the gearing to come back closer to our preferred range, which is 45 to 50%. Saying that, you have to remember that Fonterra is a very seasonal company. Our working capital requirement follow the milk curve, the milk supply curve in New Zealand, which means that we're getting much more milk around October, November, and our funding requirements around that period of time are more significant than usual. But again, the trend will definitely be for the gearing to come down.
Last year, Fonterra retained some of the payout to help reduce its debt. Do you think that Fonterra could use that mechanism again to reduce debt levels if it needed to and protect the interests of bondholders?
It will be up to the directors to decide that, but it's definitely one of the options we have if we need to do something to reduce the gearing further. Yes.
Fonterra has said in the past it wants to perhaps change its capital structure and potentially bring in new sources of capital and allow shareholders ways to exit if necessary. How might a capital structure change in the next few years affect the interests of bondholders?
It's very difficult to say because it really depends what the changes would be. If you step back and remember the discussions we had with farmers in November 2007, the discussions are really around 3 points. We want to look at giving farmers some choice and some ability to diversify away from a very high concentration of wealth in dairy industry. We want to get the ability to get potentially external capital. Because if you look at the way our equity base is composed, equity can only increase if we get more New Zealand milk, essentially, which has limitations in itself. And finally, we wanted to look at the issue of the redemption risk, so the fact that farmers can leave the co-op and we have to buy back the shares. So we have ongoing discussions around how we can address these 3 points. I think we've made it very clear that the option we presented in November 2007 has now been parked, so we are basically back to the drawing boards looking at different ways we could approach that. To the best of my knowledge, there's no plan to come back to farmers with anything in the near future. So the impact on bondholders would definitely depend on the type of solution we discuss with farmers, and that's been agreed upon. But in all situations, we would take into account the position of our lenders, the relationship with all lenders, be them retail investors, banks, etc., is very important to us. So that's absolutely something we would take into account in any decision like that.
Can you explain for mum and dad investors the redemption risk and whether or not farmers essentially could clean out Fonterra's coffers if there was some sort of problem?
The redemption risk is essentially the fact that share ownership in Fonterra and milk supply are linked. So farmers become shareholders by supplying milk to Fonterra. If for some reason they decided not to supply milk anymore, Fonterra would have to buy back the shares that were issued to the farmers. So that's what we mean by redemption risk. The best way to address redemption risk is by providing a good return to farmers, and that's really the focus of Fonterra. And that's the easiest way and the most significant way to reduce the redemption risk. We also have a range of tools we can use if we are faced with a significant redemption risk, and that's in a way we buy back the shares from farmers. We have the option of paying the shares in cash. We have the options of issuing capital notes, which are subordinated to normal bondholders and allow us to meet redemption without cash outflows from Fonterra.
So there's not much of a risk of farmers deciding to exit Fonterra because of the lower payout and cleaning out the coffers?
I can't answer that question, but again, I think it's the commercial performance of Fonterra is what would prevent farmers from doing that. Is
Fonterra too big to fail in New Zealand?
I think history has shown that nobody is too big to fail, but sorry, I'm not too sure how to answer a question like that.
I'm being a bit cheeky. Well, there we have it. That was Stephan Deschamps, the General Manager of Treasury at Fonterra, talking about Fonterra's $300 million bond issue. If you've got any queries about this bond issue, or you just want to have a chat about Fonterra, use the comments below in this post. We'll be following this story over the next couple of months. I'm Hickey for interest.co.nz, and that was a special report on Fonterra's bond issue.